welcome all of you, and let me say that we also have participants from the British Chamber of Commerce today. And let me invite you to PwC Kazakhstan other webinars. For example, tomorrow we will have a webinar on horizontal monitoring. And we will also continue with presenting some international taxation issues. For example, we agreed that at the end of October, we will conduct another webinar on new Kazakhstan CFC rules. So everything will be sent, all invitations will be sent to you. If you wish to participate in any webinars, please make sure that your contacts are provided to Perizat, which is our host for today's session. Again, let me introduce Temirlan Nildebaev, our senior consultant in PwC Kazakhstan, who helped me with MLI topic.
Good day, colleagues.
And today we have Malika Saidova. Malika is our manager in PwC Rotterdam. And Malika is in Chris' team. She's very experienced with clients from our part of the world, I would say.
Hi, hello.
Yeah. And we talk on the first session. We talk about generally MLI and Kazakhstan position on it. On the second session, we discuss with Mikhail Filinov the practical aspects of applying MLI and applying double tax treaties in CIS countries, and specifically we spoke about Russian experience. Today, our session is about Western Europe approach, and I think that the Dutch practice, the Netherlands practice is very important because the Netherlands are #1 in foreign investments to Kazakhstan. So, and my first question to you, Chris, it's what about MLI in the Netherlands, whether it's effective already or not?
Yes, thank you very much for having me here and for the nice introduction. And it's good to see that you are already very much adapted to this new way of working and hosting all kinds of webinars for your clients and relations. I think it's it's very good, and we'll take this at home as well here in the Netherlands. At the MLI and its effectiveness, yes, it is effective in the Netherlands. The first draft legislation was presented to the parliament already end of 2017. And then in 2019, to be specific, 12 February, the Dutch second chamber adopted it, after which it also needed to be adopted by the Senate. So the first chamber, which happened on 5th of March 2019. So for covered treaties and covered clauses in covered treaties, it is effective already indeed, yes.
Okay, thank you, Chris. My second question to you. We all know that all significant changes in the legislation in the Netherlands should undergo public consultation. So what about MLI? Was such public consultation organized before the Netherlands committed to MLI or not?
Yeah, it's a good question, and indeed you're very well informed. Most legislative changes undergo a public consultation, often formally, sometimes informally. In the instant case, the main consultation already happened by the OECD, where interested parties could provide their comments. So there has not been a separate specific public consultation in the Netherlands on this on this topic, on the MLI and the principal purpose. test. Of course, what happens is that the Dutch Order of Tax Advisors has a platform through which they provide input, and PwC also through that channel provides for input, and if necessary, also through own connections.
That's very interesting, actually. What kind of issues PwC provided to this public consultation?
Yeah, I think the main input that we provided is the comparison with other countries that made other reservations towards the MLI instrument, and then a country that often comes to mind is Luxembourg. Who took a little bit more of a shall I say conservative approach, or investor-friendly approach, and then on some of the clauses. That is input which was also conveyed to the Dutch ministry.
So what was it agreed by the Dutch ministry, that input?
Well, some elements were taken over, but it's not the case. Like the main element, which is also what we as PwC also here in the Netherlands of course endorse, is that abusive situations should be tackled, and I think in the definition of what is abusive and what is not abusive, well, especially nowadays, that's also it has become more of a political question, so to say, which is I think it's a fact of life, and it's also why it's important to be able to provide input to draft legislations, in order to also provide the professional input from our perspective. I can imagine that that's equally important everywhere around the world, and you also see the politicization, I think, in the whole tax debate globally as well.
Okay, probably my last question about public consultation: did it take a lot of time, or it was very quick process?
No, well, the first draft was presented to Parliament end of 2017, and the second chamber only adopted it in the beginning, so February of 2019. So some time passed. I think this time did not only pass because this was a difficult topic, but also because many other things were happening. Yeah.
Okay, thank you. So that's very different, I will say, from Kazakhstan, because I haven't heard about public consultation on MLI before Kazakhstan joined MLI. However, still there were some public consultation about how to apply the principal purpose test.
Yeah.
So let's move to the position of the Netherlands on MLI. Are the Netherlands planning to apply MLI to all double tax treaties or to some specific ones?
Yeah, that's a good question, and I think it also requires a little bit more in-depth knowledge. So if you allow me, I will briefly elaborate.
Sure, thank you.
First of all, every year the Netherlands are renegotiating/negotiating tax treaties with other countries. Well, many of these treaties which are being renegotiated are not included as covered tax agreements by the Netherlands, and that's, I think, the first word which you also have discussed in your previous webcast is covered tax agreement. So treaties that the Netherlands is currently renegotiated are often not covered tax treaties from the Dutch side. For instance, the treaty with Poland or the treaty with Belgium. And then so having defined that important word, well, the first step is the MLI in force? Well, we just saw in the first question that the MLI is in force in the Netherlands. Then the second question is the tax treaty with a country, let's say Kazakhstan, is it a covered tax agreement? Well, and then if the answer to that question is yes, then you have to determine whether specific MLI provisions are applicable to the treaty. And this also needs to be assessed from a Dutch angle, and in the case of Kazakhstan, also from a Kazakh angle. And then it needs to be seen what kind of a measure is proposed for the specific article. Is it like a minimum standard which is applicable to certain articles in the MLI? And there are also various articles in the MLI do not provide for minimum standards, but they provide jurisdictions to opt in or to opt out from such an element which is dealt with.
Okay, thank you. Let's move to covered agreements. Did the Netherlands include the double tax treaty with Kazakhstan to the covered agreement?
It's included. Yes, it's included.
Yeah.
And as from January 1st, 2021, it will apply to withholding taxes, and if I'm not mistaken, as from April to the other
provisions.
Yeah, exactly. Yeah.
Yeah. Okay. We also discussed provisions of Article 7 of the MLI, which is included to the minimum standard of MLI. So about principal purpose test and limitation on benefits. So we understand that Kazakhstan selected to apply simplified simplified limitation of benefits in addition to the principal purpose test, like, for example, other countries in CIS like Russia, Ukraine. We also understand that most European countries like the Netherlands didn't select to apply simplified limitation of benefits. Chris, any view probably why there is such difference in positions?
Yeah, I think I do have an idea about why we choose the principal purpose test and not the LOB. Maybe it's good to reiterate what the principal purpose
Sure.
test pertains to. Basically, if obtaining treaty benefits is the main or one of the main reasons for an arrangement or a transaction, treaty benefits will be denied unless granting the treaty benefits is in line with the spirit and the intent of the specific treaty provision. So there's it's kind of an open norm, right? And also in the Netherlands, we have implemented a lot of EU directives, which also contain, well, similar or comparable anti-abuse provisions. So we are, I would say, well, to a certain extent, familiar with that concept, whereby I think if you would go to an LOB-like clause, which in my view, depending on how you fill it in, could be more beneficial to taxpayers because it's more objective rather than subjective. Because if you tick certain boxes, then the provision applies. I would not be surprised if there's some intent in not filling everything in 2 figures after the dot. So I don't know if that is the reason, if the opposite of that is the reason why it is included in Kazakhstan. But that would be, I think, a question from a Kazakh perspective. But this is the well, a short reflection on the Dutch side of it.
Thank you, Chris. My view that from Kazakhstan point of view, probably it was like easier to include this simplified limitation of benefits because we have like specific list of qualified persons, and probably it's easy to manage when the double tax treaty with MLI provision should apply or not. Probably that was done intentionally. But let me remind that even if Kazakhstan selected to apply simplified limitation on benefits, and the Netherlands didn't opt for such provision, on the double tax treaty between Kazakhstan and the Netherlands, we should apply principal purpose test only. Yeah. So, Chris, my next question to you, any practice in the Netherlands on the principal purpose test? Probably any recommendations, any instructions, anything?
Yeah. Well, of course, it's for everybody involved. It's still relatively new. So practical experience as to challenges by tax authorities, etc. We do not yet have. Of course, what we are doing is for clients. Is checking and also assisting them with identifying what should you do to make your structure a more robust structure, also in view of the PPT requirements, right? Because it becomes very important to be able to say, and more important than being able to say is also to be able to substantiate that not the main the main benefit of the structure or the main purpose was to obtain a treaty benefit, right? So important to be able to collect other arguments why a certain structure and setup was chosen. And as this is a very case-specific exercise, and it also, well, depending on the kind of structure, may be easier to substantiate than in other situations. It's important that that companies which work cross-border, that they really start to work on that, especially also aimed at building a file with well, it can be a diverse range of documents from board minutes to shareholder
financial
meetings,
statements,
to
for
financial
example.
statements, you can basically go through all the corporate documentation to see if and to substantiate that the main purpose was not making use of a specific clause. Well, that was not the main or one of the main benefits, and that at the same moment is, of course, it's also quite vague, I would say. Of course, in EU law, ECJ, the European Court of Justice, there is some more clarity, but it's still difficult to explain, and hence the more important it is to have a proper documentation of that substantiation available.
Okay.
So that is the practical experience that we have and that we are basically going through at the moment.
So right now you are busy with helping our clients with such defense files.
Exactly.
Like looking on their structures, understanding whether there is any like business reason behind. In addition, like.
Yeah, indeed, and also reinforcing structures.
Sure.
And to be honest, of course, certain structures may also be dismantled, and that not only because of MLI, but because of the whole all the developments in the tax world, I would say. Well, they could lead to the fact that a certain structure is less efficient nowadays than it was in the past. And let's be honest, I think if you take a structure and look at it today, the conclusion may be totally different from what it was 10 years ago. And that's not only because of technical changes to laws here and there, but also because of changed societal aspects in that regard.
I see. So our recommendation to all our clients, if you have any like presence, any international transactions, any presence in foreign countries, please again revisit your structures. Please revisit your transactions. Please understand if there is any business reason behind such transactions, such structures. If you understand that probably it's very hard to find a business reason, probably let's think about how to simplify the structure. Probably it's better to stop such transaction or to simplify the structure. If you find that there is a business reason, you can come to your advisors and think about how to prepare what kind of documents you can think of in order to reply to the PPT test main question, if there is any, if the use of double tax treaty is the main or one of the main reason of the transaction or the structure. So please do this exercise. So
Can I add one thing?
Sure.
I'm so sorry for interrupting.
Yeah.
You, but that's I think one of the downsides of using this format, that it's difficult to interrupt without interrupting, because signaling is not possible. Now, there's one thing I wanted to add there. It is not necessarily very difficult to find business reasons, because I think it's important to realize that they do not need to be huge philosophical elements, right? Like a cost saving on a group financing, for instance, can be a perfect business reason, right? So it is. I would like to also to mention that it's do not shy away from but that's not really a business reason. I think it's good to basically to list anything that comes to mind, and then it needs to be assessed whether or not that would indeed be a valid business reason. And of course, to your point, it's always easier to find a business reason in an active operating structure than in a pure holding structure, right?
Sure. Thank you, Chris. And please interrupt me if you see any need. I would also, I would like to again remind the audience that our tax authorities prepared a draft methodological recommendations on how to apply principal purpose test. And such methodological recommendations were distributed via Association of Taxpayers of Kazakhstan. I think that last week there was a sort of final discussion based on the basis of such association. It was not very long. Those people who were present could understand. So let's see how these methodological recommendations will be implemented, whether they will have any mandatory force or they will have like just a recommendation force. Let's see. Chris, I suggest to move like to certain examples. For example, the issue of multinational companies is very like of hot topic in Kazakhstan. Let's assume that we have a multinational group, and let's say that it has a subsidiary in the Netherlands or like some presence in the Netherlands. And there is a sort of like regional hub somewhere in the jurisdiction which has a double tax treaty with the Netherlands. So there are charges, management, consulting, IT, or probably royalty charges, like sort of non-material services provided by this regional hub to the Dutch subsidiary. So can we say that there is a business reason that PPT should be passed? What could be our recommendations in that case to the clients?
Yeah, it depends a little bit on what does happen in the Netherlands by the subsidiary. If it's an active operational subsidiary or if it's a holding financing company. I think it's good to first determine that element and then see, okay, for what kind of payments basically do we need to rely on the tax treaty that the Netherlands have concluded, and the next step indeed is then to determine which articles of the MLI are relevant, and assuming that the PPT is relevant and assuming that the Netherlands needs to based on the treaty need to step aside either by reducing a levy or not levying at all, then it will be important to assess that there is sufficient nexus, right, between the active conduct in the Netherlands and the charges that are being made. But one thing I forgot to add to your previous question, I think it's always important to be aware of the fact which if there are two countries that with the tax treaty, which country needs to give up certain of its levy rights or reduce its levy rights, because the company in that country will be the one with a main interest in meeting the tests that are required to meet in order to be eligible for the reduced treaty rates or the nil rate or what have you.
So if we go to that example, for example, the IT charges or the royalty charges which are done by regional hub to the Dutch subsidiary, I assume that they should be subject to tax in the Netherlands. And in that case, how the Dutch tax authorities look on such kind of transaction, whether they understand that there is like a pure reason, tax reason of applying double tax treaty between the Netherlands and another jurisdiction to minimize the tax due in the Netherlands on such charges, or there could be like some arguments saying that there are business reasons, this is a normal activity.
Yeah, I think the latter that you mentioned, right? Because in this example, I would indeed be more focusing on deductibility in the Netherlands, and not so much on local withholding taxes. because today, well, we have dividend withholding tax, and interest withholding tax in certain situations is being introduced. And there will be some more fine-tuning, if I may call it like that, to our dividend withholding tax regime, but that's only anticipated as it stands now per 2024. So so in the case you mentioned it, the focus should be as far as the Dutch side is concerned, indeed on the deductibility and the connection with the business in the Netherlands.
Chris, that's good that you mentioned deductibility. So I will say a step like aside of our main topic on MLI, because just mentioning that the government of Kazakhstan right now is thinking of how to, what kind of additional measures could be taken in order to make more money in the state budget. And one of the proposal was to limit deductibility of such kind of non-material service on expenses or on such non-material services if they come from abroad. So, and we understand that there is right now there is a huge discussion between business and the government about whether it's good, whether it's not good, what kind of arguments could be taken. Okay, my next question. Will the Dutch tax authorities go to the competent authorities of the jurisdiction, for example, of that regional hub, just to like make sure that that regional hub paid taxes on income which goes from the Netherlands in the jurisdiction of its residents, or they will just raise questions to the Dutch subsidiary only?
Yeah, that's a very good question, and what we also need to take into account there is basically the rules and regulations around the sharing of information, if you will, because such actions are covered by that, and we have a national law dealing with that, and of course tax treaties also need to be taken into account. So there is we have certain elements which are subject to spontaneous exchange of information. We have certain elements which are on a well, basically on a request basis, and there is certain information which is subject to automatic exchange of information. Well, if the Dutch tax authorities are assessing the robustness of a structure, what they often start with is sending a letter to, in your example, to the Dutch company involved, right? And then they basically raise a number of questions. It starts with very simple questions like what is, well, of course they know the address, but how many people do you employ? How many board meetings do you have a year? What do you discuss there? Do you have some substantiation thereof, and what is the revenue in the Netherlands, and how much and what kind of sources are generating the revenue, what is the ratio compared with the income that is rooted from abroad, if that's the situation. So and from there they basically drill down into certain specific areas if they think there is a need to do, but they will start with the Dutch side, and of course it also sometimes happens that a foreign tax authority approaches the Dutch authorities with certain questions. Well, in some cases they relay these questions to the Dutch taxpayer. In some cases you're not aware of it as a taxpayer.
Okay, I see. Thank you. So then probably our recommendation will be here, like, please prepare to the issues around about your business when MLI will start, when MLI provisions will start applied to the double tax treaty between Kazakhstan and the Netherlands. So either this will be Kazakhstan tax authorities who will raise a question locally, or that could be Dutch tax authorities who can raise questions to your Dutch companies. Okay, my next question is about whether the Dutch tax authorities can come back to previous years. For example, we understand that MLI should apply to the double tax treaty between Kazakhstan and the Netherlands, starting from to withholding taxes, starting from 1st January 2021. Can the Dutch tax authorities, let's say, like in 5 years, in 2026, say that a certain transaction which was happened before didn't have business reason?
Well, they do have, based on the General Dutch Tax Act, there is a reassessment period of basically of 5 years after the fact. So indeed, they can reassess within 5 years. But they can only do that in case of a new fact which they should and could not have known at the moment that they were notified of the transaction. So to say, that is how it currently works in the Netherlands. And I do not. I think also relevant in this case is how would Kazakhstan look at that? For instance, if a Dutch entity has a subsidiary in Kazakhstan, making a payment to the Dutch entity, then it's Kazakhstan that needs to determine if reduced rates can be relied upon. So I wouldn't dare to answer the question from that perspective. I think indeed it's also more of a Kazakh question, and also a question legally of information exchange. How far down the road can a government ask questions to the Dutch government? I wouldn't dare answering that question on the spot, but I do know in the Netherlands the reassessment term is 5 years generally, and 12 years for foreign sources of income.
12 years
for foreign sources of income earned by a Dutch entity. Yeah.
In Kazakhstan, the statute of limitation period, the reassessment period, is 3 years. Okay. 5 years for certain categories of taxpayers, like subsurface users, taxpayers on monitoring, those who are on horizontal monitoring, etc. And like for other categories, it's like generally 3 years. But this is like a very, very important question, whether in 2021 the tax authorities will start apply, for example, in Kazakhstan, will start apply PPT to previous transactions or not. We assume as tax advisors, we assume that they should apply PPT going forward, to the transactions which happen after 1st January. Let's look on another example. For example, again, I'm asking about a Dutch subsidiary and the approach of the Dutch tax authorities. For example, there is a certain payment from the Netherlands, from the Dutch subsidiary to foreign, I don't know, to foreign holding company, yeah, and we say that under the such payments could be subject to either tax exemption or to reduced withholding tax rate under the double tax treaty. We are not like taking the participation exemption rules right now, which exist in the Netherlands. But we also understand that the foreign holding company is not subject on that kind of income in its jurisdiction of its residency. So taxation happens only in the Netherlands, and there is a main question whether we are allowed to apply double tax treaty or not, because there could be like a reason saying that the foreign holding company is not suffering double taxation. It doesn't pay tax in its jurisdiction of residency. So what will be the approach by the Dutch tax authorities in that case?
Yeah, that's actually a very good question. I think because it also brings in other elements which are very much on top of the agenda today, which is basically also the implementation into the Dutch national law of anti-tax avoidance directives, for instance, right? Because in case of the question that you raised. The main question is, are you already entering into a tax treaty, or should we first take a look at what does the Dutch tax law say, right? Assume this payment by a Dutch entity without a pickup abroad. Well, the first question is, okay, how would this work out based on Dutch national law? Is this payment deductible in the Netherlands or not? Well, because we have been implementing the Anti-Tax Avoidance Directive 1 and also 2. Certain steps need to be taken to determine whether or not the payment would be deductible in the Netherlands based on our national law. And one of these steps is to determine why is it not taxed in the country of the recipient. Is it because there's a hybrid element either in the payment or in the foreign entity, and some other elements need to be focused on. I think it would go too far to discuss that right now, but this is what needs to be done. And then the second step is, if it's a payment which could be subject to withholding tax here in the Netherlands, and then indeed we would need to see what would be the reason for reducing the withholding tax rate. Let's assume it depends a little bit on in which country is the recipient and what kind of a payment is it. But first, in the Netherlands, we need to start with what does the national law say, and then on top of that we take a look at, okay, does the treaty basically, does it prevent the Netherlands from exercising its right to levy based on the national law?
Okay, thank you. So it's not like a black and white question.
No,
this is like a very complex issue.
Yeah.
Okay, let's speak about arbitration provision, because arbitration is also included into the minimum standard of the MLI. Kazakhstan didn't select arbitration, so it didn't opt in. What about the Netherlands?
The Netherlands did opt in for the for the arbitration, for the mandatory binding arbitration. But this is only relevant when countries fail to resolve something based on a mutual agreement procedure. So with the mandatory arbitration, there's not yet a lot of experience because that's new. We do have some experience, quite some, I think I can say without being chauvinistic, with so-called MAPs, mutual agreement procedures. So yeah, there is experience with that vis-a-vis a variety of countries. Because well, there are certain tax treaties which contain maps for a number of years already.
And based on your experience, how long is like arbitration take for each case?
Yeah, it depends a little bit on the case, but you need to hold your breath for quite a long time because generally it's around 3 years. So
Wow.
it's quite a while. So it's also worthwhile to take that into account when deciding whether or not to go for a MAP, right? And it can be especially pressing when it contains a matter which is also material to the annual accounts and for the auditor involved, for instance. So it can have further reaching consequences than on the tax side only, which need to be considered prior to entering into such a MAP. But I think our experience with MAP procedures and their outcome is quite good, I would say.
That's good.
So positive, right? In that way.
That's very good.
Yeah.
So if sometimes Kazakhstan joins arbitration and it will be applicable to the double tax treaty between Kazakhstan and the Netherlands, then Chris' team can support you.
Well, I will not do it myself, but we have specialists for that indeed. Yeah.
So Chris, my final question to you. Last time I asked Mikhail Filinov, who is our colleague in international tax practice in Central and Eastern Europe. So you are from Western Europe. You are from the country which is a member of OECD. You understand all these major trends which happen right now. What's your view on international taxation and namely on further application of double tax treaties? Could you please share?
Prior to responding to that question, I'm curious to hear what was the answer that Mikhail gave to you.
I can share with you, actually, he mentioned about Pillar 1, Pillar 2, some specific platforms, how to find taxpayers who didn't show their taxes properly, and all these digital things as well. So what about your view?
Yeah. Well, one of the reasons for asking is that indeed is the Pillar 1, Pillar 2 discussion, which is currently going on by a whole framework of countries, much more countries than the OECD countries, which I think also shows the direction, at least that how I'm going to put this. I was about to say that governments want to go, but maybe it's more that tax people in countries think would be good to go. But my view, and this is more my my private view, is I think that the whole BEPS project and also all the unification on taxes within the European Union are taking place for a good reason. One of the reasons was unification. I think it's sad to see that many countries, also you see it not only on the tax but also in other legislation, that many countries are having their own peculiarities and are deviating from the standards. Right? If you look at DAC 6, probably also a topic. You know a lot about.
That's very interesting topic.
Exactly, and like Poland has a much further reaching application than other European countries. So I think it's in my view sad to see that the desire for unification and not necessarily leads to a more unified approach. And I am very curious to see how this further develops also under influence of COVID-19 going on today. And also how the whole Pillar 1, Pillar 2 discussion further evolves. Because there's I think, well, also a big interest in that also for smaller countries like the Netherlands, and then of course it's good to be member of a bigger platform. But the fact that the drive for anti-abuse, so anti-abuse drive, and the aim of tax collection more equally between countries and within countries, and the desire to levy tax based on new principles that will only be increased because of also because of the COVID-19 developments and their impact on economies worldwide, I would say, because I think it will be substantial, and along with that goes the increased transparency, right? That will also. I think that will also not pause. There's more and more topics coming on top of that, because another element we unfortunately do not have time discussing is the whole connection with the taxes related to energy transition, right? And carbon emissions, and there's also a European levy. Talks about a new levy in Europe and also in various countries throughout Europe. So and this is all, it's all compiling, and it starts to become really a lot of process and procedures and related compliance elements.
Thank you, Chris.
Yeah.
I would agree that we will have like sort of challenging time.
Yeah.
And we are also very curious about implementation of those international initiatives. And again, we would like to say that please revisit your transactions, please revisit your structures. Probably if you set up some transactions, some structures 10 years ago, they could not be sustainable already during current time. So probably it's a changing world, and we should also be adapting to that changing world as well.
Absolutely.
Thank you, Chris. I haven't seen any questions raised to me. Temirlan, Chris, Malika, Perizat, do you have any questions from the audience? We have 4 minutes left.
Here's one question also. Netherlands has a lot of companies that registered but not functioning, operating, but operating somewhere else. What is the reason of opening and allowing this kind of companies? If Netherlands is a part of MLI, logically, the number of these companies will get lower. This is a question from audience.
Yeah, it's a broad question, but I think what's behind it is the fact that historically, there have been a number of holding companies in the Netherlands with limited substance. Well, indeed, those are the companies. And that I tried to discuss also in the beginning, which now you need to determine, and do we want to increase the substance, or do we want to move to one central holding location, all holding all subholdings, which are in various, which could be in various European countries. Do you want to centralize it? This is exactly those kind of companies. So it's a good question, and indeed, you would expect, and we are also already seeing that, right? That you see this number decreasing. Yeah.
Mm-hmm. Again, I will repeat that every reason should be reviewed, every structure should be revisited, and probably if that worked 10 years ago, 5 years ago, that's not working at all right now. Okay, dear colleagues, dear audience, thank you very much for being with us all these 3 weeks. I hope that you enjoyed our webinar. Please do complete your feedback form, which will be sent to you shortly. We hope to see you soon on our other webinars, and tomorrow we will have on horizontal monitoring, and at the end of this month we will have another international taxation topic, CFC. My special thanks, my big thanks to you, Chris and Malika. Thank you a lot for sharing your practice, for sharing your knowledge. My special thanks to Timirlan, who supported me with the materials all this time, and to Pirizat, who supported us with the administrative issue. If you have any questions, please raise to us anytime. Thank you very much.
Thank you very much. Bye-bye.
Bye-bye.